And we will start with the TTF front month product. And we do see that on the weekly chart, we are hitting the support area again from the ascending triangle. So we do have an inverted hammer here that usually leads to a bounce. But will it really happen? Well, we'll talk about that in just a second. Then on the daily chart, we do see that gradually we are pushing lower. So we do have a downtrend brewing here. And on the intraday 15-minute chart, we do see that we have a falling wedge going on, which usually is resolved to the upside eventually. So, starting with the TTF weekly chart, what do we see here? So, first of all, we do see that after the push higher in mid October, we have been somewhat declining lower. This is normal. It is called a pullback. If this area near 44.8, if it holds, if the support level holds, then we would probably see something of a bounce. Then to the upside, we always have the 56.17, which is this high, and then also, of course, the 200 exponential moving average, which should offer some resistance. So yeah, for now we are in this tight range, but the midterm uptrend remains in place until we are proven otherwise. This otherwise, in quotation marks, it might be happening on the daily chart already. So we do see that, just for reference, so we are in this ascending channel overall. And I like to work with the 8 and 12 exponential moving average crossovers. It's just a very simple, reasonably closely timed moving average crossover. So if 8 orange moves below white 12, then we do get a bearish signal. So we did get one quite early in early November. However, the market, we are just not yet quite forming a lower low just yet. So what does it mean? So we do have here higher lows, yeah, in an uptrend, higher lows and higher highs. Okay, so in a downtrend, we would like to see lower highs. So probably this is a rounded top, yeah, we've got one here. And we want to see lower lows as well. So I see this as the major lower low. So we want to see a break below 44.57. So this level here, zoop, before we call this a near-term downtrend. More aggressive players might have already called the downtrend here, which is perfectly fine as well. It's just simply not in line with the Clever Markets methodology, where we always want to see a confirmation from a tool as well. So the this here would have been the earlier signal, yeah, and waiting for the MACD to cross below zero would be the somewhat slower signal. But here's the thing, yeah, if we zoom in, we do see even if we break below this level, we have the 61.8% FIB retracement right there. It's like 43.43. So what does it retrace? So you're tracing this all the way up here. And now we are retracing like 50% somewhere here, 61.8% here. And if we go like all the way down here, we are back. We have retraced 100%, right? And the 61.8 is a very important support area that is usually yeah, respected. So I don't know, just having a break below this just to be stopped out here, I want to see a little bit of confirmation. But can you see with technical analysis, it's always a trade-off between timeliness and accuracy. And it is too easy for an indecisive trader to just go, okay, I want to wait until this breaks. And then, no, I want to wait until this breaks. But then we are so close to the supporting trend channel. I want to wait until this breaks before we go down. Yeah? So all of this might harm your performance. So you for yourself, first of all, don't ever take anyone else's trading methodology. Yeah. But make sure that what you're working with is still timely enough and you're not delaying trading for too long. Vice versa, do wait for a real break or real confirmation, whatever that might be in your case, instead of just jumping on a trend prematurely, because that can be very dangerous as well. So, in summary, we did get an earlier signal here. If you see this as a trough, yeah. However, if you want to identify this as a trough and this as a peak, then you might want to wait until we break below 4457, and then yeah, probably towards the lower channel boundary. So usually, looking at the intraday chart helps a lot with getting like earlier or more timely signals. So here I want to start with the hourly chart a little bit. And I have already removed it from the chart for clarity simply. But we did have, I think, somewhere here a low going on, and we do have a descending trend line that was here. So this pattern here is a descending triangle. And especially after such a good uptrend, this triangle usually resolves to the downside and activates a target, I think near 38 or 36 that was for our markets here. You'll be able to read the details in the daily Clever Markets dashboard updates for our clients. So what's happening right now? So yeah, we kind of did break below it, but if you want to be careful because this market or this falling uh, triangle had descending triangle has been prone to fake outs and false breaks and all that. So if you're a little bit more careful, you might want to wait until 44.5 support is taken. If you're a little bit more aggressive, you probably would have well entered a little bit earlier. Probably can see here we are waiting for the 8 and 12 exponential moving average crossover. So in our case, it came already on the 15th of November. So once again, TA always a trade-off between timeliness and accuracy. And yeah, the important and that's the thing that I did personally, to be completely honest. I always waited for okay, one more level of confirmation, one more level of confirmation, one more level of confirmation, and then the whole trend was over already. So don't make the mistakes that I made probably 8 years ago. Okay. So what's happening? We do have the MACD clearly below zero. That's looking good. We do see that the stochastic is making like lower lows as well and lower highs. So that's kind of fine. Falling wedges are usually resolved to the upside eventually, 2/3 into the apex. So probably we could see like one more swing and then maybe we would break higher. How high? Well, usually it's this distance here. So this is just a quick and dirty method. Usually you want to calculate it. It's just for now, for the purposes of this video. So if we, let's say, can you see what I did here? I was measuring, whoop, what's happening? There you go. I was measuring the distance from here to here, yeah? And this distance is then applied to the breakout direction, wherever it might be. We might break here, or down here, or down here, yeah? So this would then be the target. So let's say we break anytime soon, that would be at 40, near 47. That would be an upside target before ultimately the idea is to then break lower. And can you see that would be exactly in line with what's been happening? So the flow of lower lows and lower highs. And in a downtrend, we are trying to trade the down legs, and uptrend, we are trying to trade the up legs. Why is that? Because there's simply way more room for the market to develop, for us to make some gains, instead of just trying to jump on the shorter up legs. We have way more time for the down legs, a little bit sideways up. Yeah, we have way more time for the down legs. So here exactly the same. If you jumped on it fairly early, down, 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 and yeah, so for now, by the way, we did switch bearish quite some time ago within the Clever Markets daily report. This level here, let me zoom out again. So this triangle that's been forming here, this is simply there to activate the downside target, which is near 36, 38. Okay, let's zoom in on the 15-minute chart. Just a little bit more granular here, but right now we're not getting any more value out of that. You just see the swings a little bit nicer. Okay, if you're ever wondering why did I try to measure it here and not here, let's say if I take it all the way. Oh my god. Okay, let's put this back over here. If I take it all the way until here. Yeah, so I'm just elongating this. Why am I not taking this longer distance? Because this is the first point of contact, right? So here's the thing. So I haven't seen this anywhere else. It's just Clever Markets, part of the methodology. Usually, truly, so by textbook, yes, we would probably take this longer one here. But there's a very famous technical analyst, Bukowski, and he has the pattern site, so feel free to Google that. Um, and there he establishes that this target is rarely reached, like for any pattern, like triangles, rectangles, wedges. Yeah, the targets are rarely reached. So instead, it's always this line or this distance, and then it's always like minus 20% or minus 30% or something like that. Yeah. So instead of doing the calculations, we at Clever Markets usually just move one step in, and that usually is the fairly accurate level, target level that's being given. So a little trick for you. Okay, cool. So let's zoom out in summary. Weekly chart, bullish because of the break higher, but we are still below the 200 and we are a little bit squeezed into this tiny range here. We want to see if this inverted hammer is holding and leading to a bounce. Chances are low that it will hold, and it's more likely that the market will probably resolve lower on the daily chart as well, possibly towards the lower channel boundary in the low 40s. However, this move lower doesn't really happen like in one go. Okay, it rarely does. For that, we want to look at the intraday chart. We probably see a little bit more of a decline before eventually breaking higher, then of course with a target, and then the downside should continue. On the daily chart, that might look like another red candle, couple of green candles, and then lower again. And that is it for the TTF front month. Before we move over to the next contract, I have a little favor to ask. If you find any of this useful, then please consider sharing it with your colleagues if you think they would get something out of it as well. Would really mean a lot to me. I'm just trying to spread some knowledge here, and if you want to learn more, go to clevermarkets.com. Alright, now let's go on with the contracts. So what's happening on Brent? So we did see that we are mid-term bearish. We've been for like 2 or 3 weeks already. And now we do see that we have a little bit of the market like wandering, a little bit of hesitation. And that's expressed in this small-bodied candle with the really long wicks. So the market is like testing out a direction. And we did end on the daily chart last week with a bullish Harami pattern, which usually leads to a little bit of a gain. So that was quite dramatic. Like on Thursday, boom, really strong downtrend, hitting the lower channel boundary, and it was all undone on Friday. On the intraday chart, in this case 15-minute, it looks a little bit like this, and we are a little bit in a stalemate. And this is usually a really advantageous position for the market to end and then for the next week to start for all intraday traders. So let's look at the details. So for the weekly chart, what is happening here? We did switch bearish, I think a couple of weeks ago, 2 weeks ago, because we did move below the preceding trough and we did get a bearish signal here. We also see that the stochastic, so that's my favorite oscillator, you can choose whatever you like. We also did get bearish lower swings, lower lows and lower highs, and we are about quite yet get a bearish signal on the MACD. Of course, never forecast the forecasting tools, but it seems pretty likely that possibly we could make it below zero, and that would then continue the downtrend on the weekly chart. So on the daily chart, it looks a little bit like this. And a couple of days ago, we turned this channel was previously a descending or falling wedge, like so, right? But before this happened, we had it here. And descending wedges, falling wedges are driving price into an increasingly tighter range, right? If we continue this here all the way into the apex of the pattern, we would usually eventually break higher, usually like 2/3 into the apex. But we did see that on Thursday, we actually made it all the way down here. So my first instinct was once again, I'll just copy paste this line here and then pull it down here and check if there's any overlap. And of course, there was. Now we do have 1, 2, 3, 4 touches. We would like to see a fifth touch for the channel to be confirmed, but I feel like this is pretty solid already. So 4 touches, so 2 on each side, is usually a tentative channel pattern, and a fifth touch would may confirm it. But for now, this is looking pretty good actually. So what will happen at the start of this week? So we did get a bullish Harami pattern, which usually leads to gains. What do the tools say? So we did see that the stochastic, which previously moved lower, now kind of is a little bit hinging. So we are unwilling for now to move lower, it seems. So there is a chance for the market to break higher, but we need confirmation. That's the whole deal with technical analysis. We're not forecasting, we're just putting on the levels that would say when something is confirmed or not. So for these Hanami patterns, as you have one big red candle and a smaller green candle contained within it. So we are taking these boundaries, 81.17 and 76.6. If we break above 81.17, we could possibly make it all the way until maybe 84.58, maybe even all the way until the upper channel boundary. So that's the idea. We break until above this level, and then boop boop could all the way make it here. Harami patterns, or just in general candle patterns, they are usually only really good at predicting the next, I don't know, 3, 4 candles maybe. So I wouldn't expect like full on trend reversal just because we have this thing here. Yeah? So I would say for now, we remain within the channel. Why do I think we will remain within the channel? And why do I think that this is only a correction and not like a full on trend reversal? Well, very simple, because we are looking at the MACD, which helps us a lot with establishing like the trend and the direction and the momentum. And we can see that like bearish momentum is still growing. So combining the midterm outlook, yeah, not midterm, but like within the channel overall, we are still bearish, yeah. And yes, this year would confirm a smaller upside correction within it. So within the downtrend channel, which is confirmed by the MACD, we might see a little bit of a pull higher. Now let's have a look at the 15-minute chart. We can even start with the hourly chart. And I always do like these setups. They're very easy to trade, or reasonably easy to trade. But let's zoom out first. So we do see that intraday we have this descending trend line that's been hit like once, twice, 3 times, 4 times, and now we are making our way to the 5th time. Here a little bit of just a little bit of insight. Whenever I see a trend line, I immediately copy paste that and try to turn this into a trend channel. Right here, it might have worked out almost here, yeah. But here, I would say we did have like almost like too significant fake outs. So I don't think that this trend line is offering us any value right now as a in terms of like its support level. So that's why I am not drawing it in, and I only go with this. Okay, so let's zoom in. I do always this is it's a strong red candle on the daily chart, and that's the strong green candle on the daily chart. Can you see here on the red candle, green candle, red candle, green candle? And what will happen now is like really interesting. And so we are at the top. We ended the week at the top, and we can now retrace lower. So this entire up leg, we can now retrace lower. How low? Well, if we break below 80, so the 23.6% fib retracement, then you could make it all the way until like the 50%, 61.8% fib retracement. Beyond that level, we are most likely to continue higher. So once we reach that, we are probably continuing higher. I think for now, a break lower might be more likely than upside continuation. Why do I think that? First of all, we did have a good run, and that's usually unsustainable. So we need a little bit of at least like a sideways trend. But I do think that a break below 23.6% is more likely, because we did get a bearish signal on the stochastic. You can use another oscillator. I like the CCI as well. So this break lower here would usually probably lead below 23.6. And then FIBs often offer like waypoints. Why do I think that after the correction we're going to continue higher? That's because the MACD, we just turned bullish. That's looking good. This year is looking pretty solid as well. The 8 and 12 exponential moving average. So this is how I do it essentially. I like it when we end the session in after an up leg or a down leg in a little bit of a sideways trend, because it gives us really clear. Now I'm on the 15-minute chart. Gives us really clear indications of where we might be going. Right below 80, probably heading towards 78, 79. Above 80.81, we could probably make it all the way to 82. It's tiny, yeah, to the trend line again. So this is kind of nice. I do like this setup very much. Okay, And then, of course, this would dictate what's happening here. In summary, a break below 80 this morning could lead to the 50 or 61.8 FIP retracement. If we, however, maintain and move higher to 80, above 80.81, we could make it to 82.02. This would then have an impact on this candle here, depending on what we are seeing here. So maybe we open a little bit lower and then before we push higher again. The idea for Brent, for the daily chart, is to maybe correct higher, but the underlying downtrend is still in place, as shown with the MACD. On the weekly chart, we did see some hesitation and we might see a little bit of a green candle this week as the market is correcting higher. But ultimately, the idea still is also for Brent to move lower in the midterm. Okay, I hope you enjoyed that. That was the Brent Outlook for the week starting 20th of November. And that's it for this week's Outlook. If you found that useful, then please consider sharing it with your network. My name is still Marcello Colax. You can find me on LinkedIn. I am very active there. Every single day I post my thoughts on the European energy markets there. So do give me a follow, connect with me, and check out what else we have to offer at clevermarkets.com. Thank you very much and see you around.